Good afternoon, everyone. It's my pleasure to welcome you to SRP's latest webinar, which will focus today on all things ESG. My name is Amélie Labbé-Thompson, and I'm Head of Product and Strategy here at SRP. The ESG thematic is one that we cover very regularly in our news, in our data, and for those of you who have attended our events in the past in the US and in Europe, you'll know it's a really popular panel topic that draws a lot of people and a lot of interest. So-called socially responsible investment started really as a sort of niche market roughly 20 years ago, with a number of pension funds, asset managers incorporating them in their mandates. Particularly as it pertains to structured products, the first record appeared in a sort of leverage certificate linked to the FTSE4Good Europe 50 index. Fast forward roughly nearly 20 years, and while ESG structured products make up one part only of the wider trillion-dollar ESG assets under management, issuance of ESG structured products has skyrocketed, and sales volumes have reached tens of billions of dollars with active markets, for instance, in France, in Benelux, the US, and certain markets in Asia as well. One thing's for sure, sustainable and responsible structured investments are here to stay, and ESG factors will bear increasing importance as investors build portfolios. But as with all investment themes, questions remain, which is why myself and my great host of expert panelists are here today. Before we kick off, I just want to remind anyone listening, if you haven't seen it already, there's a Q&A function on the right-hand side of the panel, which enables you to send some questions to our panelists, and they will try to answer as many as they can at the end of the webinar. So to kick off properly, let's start with introductions. Ines, would you like to start?
Yes, good afternoon, everybody. My name is Ines Dinocha. I'm currently running a portfolio for non-exec director positions. I'm also vice president for the AFG, which is the French Association for Investments. Previously, I was CEO for Aviva Investors and Lixor. I spent almost 30 years in the finance industry. As far as ESG is concerned, I am focused on ESG. For long, I've created the policy in Société Générale Group, but also last year I was awarded European Sustainable CEO of the Year in 2019. So ESG is at the heart of my thinking and way of doing business currently.
Perfect. Thank you, Ines. Isabelle, over to you.
Hi, good afternoon, everyone. My name is Isabelle Milat. I'm Head of Sustainable Investment Solutions for Global Markets at SG. Spent 13 years on the financial markets and started in this position 3 years ago. Very much also focused on ESG. Obviously, our bank has put at the core of its strategy, including on the global markets activities, which is my remit. Thank you.
Thank you, Isabelle. Patrick? Oh, Patrick, I think you need to unmute yourself. Patrick?
Sorry, can you hear me now?
Yes, it's okay. Yeah, all good.
Okay, sorry. Hi, everyone. So my name is Patrick Condarjan. I work for HSBC within the Global Markets Division in sales. And I have two hats. I run sales for the wealth segment in EMEA and the commercialization of ESG globally.
Thank you, Patrick. And finally, over to you, Ronnie. I think you need to unmute yourself, Ronnie. Yeah.
Oh, sorry. So okay. I was speaking a lot. Yeah. Hi, everyone. Ronnie Gunny here from Nasdaq, based in Stockholm. So just a short intro on myself. before I joined Nasdaq, I was part of the structured products development teams and structuring teams at Swedbank, Danske Bank, and Skandia here in Sweden. But for the past 2 years, I've been at Nasdaq and in the European debt listings team. And one thing that has been concentrated around our business is sustainable bonds, which we've seen a huge interest in.
Perfect. Thank you. Thanks everyone for those short intros. So to start, I guess the sort of quizzing properly, I'm going to turn first to Isabelle and Ronnie. So if both of you could give me your view on, what do you think the goal of investors is who are, involved in sustainable investing? What does ESG mean, when it comes to risks, but also, returns?
Yeah. Shall I, Isabelle, shall I start or do you want to?
Sure. I can start if you want. Well, thank you for the question. It's an interesting one because, of course, the answer is not unique. I would say investors obviously have different drivers for choosing sustainable products. And even if drivers are always very much intertwined, I would still distinguish with 3 main goals. The first one would be what we can call values, so the desire to generate environmental or social benefits with their investments. A second one would be after values value, what you alluded to with risk-return enhancement. A third one, which I know we'll discuss later, a mounting one, will be the driver of regulation. And so I'd say awareness of sustainability priorities is crucial. We see the importance of environmental and social objectives as consumers, but as investors as well. And that has fostered the growth of sustainable investing. But a game changer for the real acceleration of this market is still risk return. And I'd say here ESG could sometimes enhance risk return when it's designed to enhance risk return, or at least ESG solutions should deliver comparable competitive risk return. It's not philanthropy. So for risk return, a first option is to select financially material ESG factors, and those differ for each sector. If you do that, you will choose ESG criteria which could either reduce the risk or more and more generate opportunities, and so impact the price of stocks, again sector by sector. It's also not tick. You need to revisit the selection over time, and as an example, a topical one, the current crisis seems to be shifting the focus to the S in ESG, for example, is what we're hearing from clients. Just, there have been literally thousands of studies on this subject. I'd like to take one and call me partial, but I'll use one from Société Générale ESG Research, which has created ESG scores for companies for more than 7 years now. And if you take their 10% best picks for Europe, over again roughly 7 years, it's outperformed the European benchmark by around 29%. So I'd say more generally, there is empirical evidence that ESG delivers performance, and it's been a driver for growth because investors are pragmatic, or even as for pension funds, simply because they have a fiduciary duty. So generally, I'd say institutional clients would be those that will seek to select financially material ESG criteria to deliver outperformance. But a second option will be rather to use ESG filters for the environmental and social benefits, and then add financial expertise to generate the performance of the products. So we'll customize solutions for that. And the very good example is to have your ESG selection and then apply risk control filters, typically volatility control, in order to deliver capital protected solutions. And I know such innovations will be discussed later. I would say again, in terms of clients, these solutions I've seen gaining increased popularity with retail clients. So as a short conclusion, you mentioned risk return. I think today we're adding a third dimension. We're trying to deliver the right level of risk return and impact, or positive environmental or social contribution for each investor.
Thank you, Isabelle. Ronnie, over to you.
Yeah, I can agree with everything that Isabelle said. So, but one thing I would like to just mention is that even though there are a lot of alternatives, investment alternatives, which are ESG or sustainability based, I think that one thing that if we're talking about retail investors or even institutional investors is the value of being able to monitor or follow the investments, right? So I think that one thing that we all need to do is to encourage transparency, disclosure, and also comparability between these investment propositions, because at the end, in search of good return, at an acceptable level of risk, you don't want to end up in a position where you see that the search of return leads to greater risk, while investing in sectors or industries or companies that might be negatively affected by upcoming rules, regulation, negative publicity in media, and so on. So I think that's also a crucial part that needs to be considered.
Okay, thanks, Ronnie. Ines, I believe you have a sort of point you would like to make as well.
Yes, I wanted to insist on the ESG on one thing, which is the risk, because we often speak about return and are the ESG investments more performant or not. But I think that also we need to insist on the risk aspect, and having some ESG bias in the investment, we must keep in mind that it decreases risks. Because we perfectly know, of course, it's quite obvious on the environment today, but also on governance. And I think that following the current crisis, we can think about social and sanitary elements for the S to be taken into account as also an element of risk. So I think the both return but as well risk are important elements where ESG rather improve the investments than decrease them. And the second element, which I think might worth mentioning, is that on ESG, I think it's less a question of comparing return and risk, but more short-term and long-term view on the investments that are done. And I think that ESG will definitely bring a longer-term view and will come back as investor with a more a sustainable view in terms of timing, and accept to have perhaps short-term impacts if it increases the efficiency and the benefits long-term. So I think this long-term versus short-term, which used to be the norm in the last probably 40 years, is probably one of big change, which is a positive element of change.
Thank you, Ines. Sort of moving on to sort of another sort of topic. As an investment theme, ESG, I'm going to say, has been so-called customized to go hand in hand with, techniques applied to investment strategies, or applied as a kind of filter when it comes to indices, funds, etc. In your view, so I'm directing that question first to you, Patrick, and then to you, Ines. What kind of innovation can we expect, I guess, in the ESG space in this field going forward?
Thank you, Emily. Yeah, thank you for the question. I think first, I would like just to reiterate that ESG is a non-financial criteria or a theme, and hence, as Isabel I think said, it could be easily combined with the risk-return profile or the payoff as desired by the investor. So it's an extra element that you add to your traditional investing. And so in terms of innovation, I think we can break it down into three layers. One is the way it is delivered, so that's the wrapper. The second one is the indices design and the themes that are used and could be beyond the generic ESG. And the third is the payoff, which is non-ESG specific. So to go a bit more into the detail on the wrappers, so there have been already some innovation in this space, and a lot draws from the fixed income market and the green, social, and sustainable market. Some examples here, and I think in the future we'll see more and more of that, which will seek to provide impact in real life and the sense of purpose for clients, which with the COVID crisis will become more dominant, I would say, in the desire of clients. So one example is we've done last year in the US is a structured product wrapped into a SDG bond. So SDG is the Sustainable Development Goals of the United Nations, which can fund projects which are either environmental or social, such as healthcare or education. Another example which has been around for a few years, we have been doing for 4 or 5 years, is doing also structured products within a green bond wrapper, which obviously green bonds is now a very big market in the fixed income space. So first element is the wrapper, is the delivery mechanism. And I think here we'll see more and more innovation. It's all about putting impact in the real life. The second one I mentioned is the index design, and we have here Ronnie as a representative of this industry. And I think, we have seen a lot of generic ESG umbrella investment, and because it's a new market and people are venturing in a more generic way. But I think we'd see more and more specific and thematic investment in this space. We see that already more in the fund industry, but I think the structured product industry, there have been some, but I expect more in this market. So we see, for example, in the climate space, Paris Agreement aligned type of indices. I think we haven't seen yet a lot of emerging market focused type of indices, which I think will come. And finally, combination of ESG and already popular themes, such as equity factors, is the kind of thing that we are seeing coming, and I think will be there in the short-term future. Finally, beyond equities, which has been, at least for the derivative and structured product market, the main asset class, I think multi-asset ESG investing could make sense as well, especially in a capital protected format. And the third point I wanted to touch base on is around the payoffs. And as I said, payoff depends a lot on the market conditions at the point in time and the client risk return profile. So in the ESG space, we have seen, particularly in the French retail market, a lot of products with fixed dividends. This is the kind of thing that actually in the current context might make more sense, given the uncertainty on the dividends that we have seen with companies holding the payments. It's very difficult to have predictions on long-dated dividends, and hence the onerous hedging cost. So such features, for example, fix that problem in the short term and reduce a lot the cost of dividends for both the bank and hence for the client. So this is the type of things, in terms of payoff and feature that has been applied. to the ESG indices. And finally, I would say probably the fund or the actively managed type of underlying might become also more important, especially with this thematic.
Thank you very much. Would you like to add?
Yes, I've already said quite a lot on that, but perhaps to take a little differently, I would say that we can think on two different angles, is what issuers could bring on the ESG compared to what they used to bring, and what investors could require. I don't think that we will see some new asset class as such. I think we will still have the same kind of asset class, but it will be an asset transformation, and definitely the way we will look as investors, we will look at the assets themselves, will oblige the issuers to look themselves at their investments differently. On the issuer side, as Patrick mentioned, for example, we can see that a lot of issuers are now presenting their needs according to green, to blue, to social, to SDGs orientations. One of the best in class in terms of issuer is someone who is making all its firm completely orientated, including the financial results, on an angle which is an ESG angle. And so I think that also we can see that some indexation and the covenants in particular are organized according to ESG criteria. You might have some covenants that change the level of performance according to the fact that you are in line with your ESG objectives or not. On the other side, what will change also definitely is that the look at indicators will change, and there will be a much stronger look put on firm functioning. I think that innovations also lies on asset managers and retail shareholders being more demanding on corporate behaviors, where we used as investors to look mainly at financial results and the way the governance was taking part of the and doing its business. We are more and more, I would say, involved and active to influence the issuers themselves and the corporates. And I think this change of behavior also is a kind of innovation. And last but not least, perhaps, as I mentioned earlier, long-term view is probably not a real innovation, but is a renewed interest in something that used to be forgotten in the short past.
Thanks. Just building on to a couple of points that all of you've made, actually some very good points. How can we ensure that the goodwill of investors is fulfilled when they invest in ESG projects? And what still needs to be done, to increase awareness of ESG investment options? So Ronnie, would you like to start with that?
Yeah. Well, as I mentioned before, I think that first of all, investors should encourage all of the ESG innovation projects that are going on. But I think, or I believe, there's also a need, or I think that the investors should raise some sort of a demand for tools that can create simplicity when they want to do their ESG monitoring. Because of course we can do all of the sales work in enhancing all of the benefits of ESG investments, but on the bottom line, it should be easier for investors to follow up on their investments. So I think that the financial industry as a whole can do a lot to encourage ourselves to create transparency, disclosure, and also more comparability between different types of ESG investments. And being at an exchange, we are involved in a lot of ESG and sustainable related initiatives. Some of our recent initiatives is the NASDAQ ESG footprint and the NASDAQ Sustainable Bond Network. And these are basically just transparency tools that help issuers gain visibility and also enables them to attract investors. But more importantly, it helps investors to make better and more sustainable investment decisions. So there is a lot going on out there into creating transparency, but there is more to do. And I think that we all can help out on that part.
Thanks, Ronnie. Patrick, I believe you wanted to add something to that? I think you're still on mute.
Okay, can you hear me now?
Yes, we can hear you fine.
So building on what Ronnie was saying, so ESG here comes as an extra consideration, right, in the suitability process. And so transparency and understanding of that need from the client is very critical. It is as equally important as understanding the risk appetite or the time horizon of the client is to understand what are the ESG requirements and constraints. Some clients might want to have exclusionary filters. Some others want to, do best in class, or it could be about risk management. So it's very important to embed actually all of the ESG criteria and client requirements into the suitability and assessment process that we do usually, or the advisor of the client will do. So that's an extra component that we add here. It is also very important to ask the right questions to understand clearly those objectives. What is the client trying to achieve? And then our role is to help them implement that. So our role is about the how. And then, making sure that clients have understood is really about the disclosures that we give. It's a lot about the education. And also regulatory guidance and incentive will help to build those frameworks and to build consistency in the way things are presented, also in the definitions. That is a very key point here because there is a lack of standardization in this field, and definition can vary quite a lot between a client and another, and the understanding can vary quite a lot as well. So it's our role really to ask the right questions, to give the right disclosure, and I think regulators are stepping in, especially in Europe, to give very clear and consistent definitions, which will help.
Perfect, thank you. Moving on to sort of a slightly more, I guess, technical topic. There's been a recent consultation as sort of late as April, launched by the European supervisory authorities on ESG disclosure standards. What's your view on this? Can standardized reporting help this space, the ESG space, grow further? And how difficult will this be to implement in practice? Ines, would you want to take that question first?
Yes, I would say I would do a mixed answer. I don't think that standardization in terms of investments and way of investing will be a key success factor for ESG and for investments going further. I do not believe neither, and I'm probably a little bit in contradiction with Patrick there, on passive portfolio management currently with ESG. In particular, because I think that ESG is a new construction, as we just told previously. And so we have to innovate and to build new standards, but it will take time. So I don't believe that we need to have finalized standards in a very short term. we need to build a new ESGized world, I would say, and this requires a lot of different type of investments. We already have a few ones. When we look at the E, the S, and the G, we already knew that it's different. But even within these three approaches, there are really multiple things to be done. We know that the amount of investments needed to transform our world into an ESG compliant world is massive. It's in tens of trillions. And so if we put all the investors on a same path, I think we will fail. So to succeed this transformation from a world A, which used to be the world, and to the world B, we need diversified investors and definitely not investors all doing the same things. But so this is the first element. So I don't think that investments can be and should be standardized. On the other hand, we understand perfectly that we need to build new indicators and having common languages, common indicators, common elements of vision. So for me, the standardization has to be done more into indicators reporting level, but definitely not at a portfolio management level.
Makes sense. Thanks, Ines. Isabelle, over to you.
Yes, thank you very much. And building on what Ines said, I think regulation could be for ESG a blessing or a curse. I mean, it's a blessing and fosters investor awareness when it seeks to create, I would say, systematic engagement between distributors and investors on their ESG preferences. And I very much concur with Patrick on this. And I'm referring in particular to revamped MiFID regulation, which will standardize the collection of ESG preferences and make it systematic. Regulation could also help if it requires consistent and comprehensive reporting by companies. We should not forget that data is at the heart of a robust sustainable investment solution. And so whilst a lot of focus is placed on the financial community, and should, of course, there's also, it's a collaborative success, and businesses are at the beginning of the ESG value chain. So consistent and comprehensive reporting on material ESG factors will be key. Also, regulation will help if it fosters transparency and comparability between solutions from different providers. And so here again, agreeing with what was said. I'd say the threat is if we're trying to impose a rigid definition of what ESG is, because it would very much deny the fact that investors have different ESG priorities. I talk to ESG investors all day, and I can very much say that they have different ideas of what they want in their ESG portfolios. And, these ideas will depend on their investment horizon, but also sometimes there's a cultural factor, especially in terms of exclusions, just to take an example. Finally, a rigid definition of what an ESG solution is that we would set in stone today would just deny the fact that ESG is progressing fast. It's a continuous improvement. And so for sure, we can do better in the future than what we can do today. So for sure, regulation can foster awareness, but creating investor awareness is our job as producers and distributors of products. And I think it's this education part, which was mentioned by Patrick, which makes our job so interesting. Communicating, interacting with clients, and understanding what solutions good for each of them. As a word of conclusion, I'd say investors also have not waited for regulators to foster standardization or disclosures in ESG solutions. Just to name a couple examples, first one would be the green bond principles set by the International Capital Market Association. I would also quote a second one, which are the principles for positive impact finance laid out by the United Nations Environment Programme under its financial initiative. So it's a group of over 30 financial institutions today. And they have come together to lay out actually a very stringent standard. Positive impact finance must be positive for environment and society, plus have no negative impact, which is not mitigated. So the projects are thoroughly audited. And building on what was said before, it requires transparency and reporting, annual audit, and independent audit and reporting to investors on these projects and their impacts. And it's what lets us, for example, distribute investment solutions that support positive impact finance projects. So again, investors sometimes are very proactive in fostering standardization and disclosures in ESG, irrespective of regulation agenda.
Thanks, Isabel. Before we turn sort of to listener questions, because I can see a few coming in, just a round-up question to sort of bring ESG, to sort of the present scenario. I think you're probably expecting that. Has the sort of current coronavirus crisis had any impact on the goals of investors who are investing in ESG? And can ESG, goals weather the sort of current storm? So, Ronnie, do you want to take the question first? Yeah, I think you're on mute, Ronnie, at the moment.
So now, sorry about that. Well, as we all know, ESG permeates the whole industry today, right? And we've seen the transition to sustainable finance as one of the largest trends, which we will also see for the upcoming years. So based on that, I don't think that there is anything that might stop this development. And since there is a connection between sustainable environment with ESG focus on the financial markets and a sustainably financial environment. So I don't think, I hope that in the longer term we won't see any impact on the goals of investors who are seeking to invest in ESG. And if anything, I believe that the pandemic has only put ESG in a different light, and also sustainability higher on the agenda.
Thank you, Ronnie. Isabel, what are your thoughts on that?
Yeah, well, building on that, I think we could first, we have to say it's early to draw conclusions of this crisis, which is actually still ongoing. So just, I think sharing a fact on resilience of ESG products, at least in this turmoil. Since March, there was a very remarkable trend for ESG ETFs to still collect net new inflows when in fact most other categories were seeing outflows. Also, an observation of the resilience of some ESG strategies, both passive and active, in this crisis. And I think we have to say drivers are mostly, or in many cases, the defensive and sector biases of ESG strategies. And by sector, of course, I'm alluding to the fact that it could be underweight in fossil fuel, and we know what happened with oil prices. So not as in ESG being, a silver bullet, but just proving, that it delivers on its at least defensive characteristics. A key question is, after this crisis has shed light on ESG and the S again, and in particular, will it last in the longer run? Again, early to say. We've heard mixed messages, but overall, still a lot of decision makers from the investing community, but also policymakers, starting to say that putting environmental and social concerns at the core of the recovery will not be detrimental to it, but will make it more sustainable. No pun intended. So I'd say we can trust stakeholders to push in the right direction, and for investors, a noteworthy initiative is that of the UNPRI, UN Principles for Responsible Investment, which are putting together groups of investors to make sure that elevated ESG priorities are here to stay after the crisis.
Thanks, Isabelle. Ines, I believe you had a few thoughts on that as well.
Yes, I think that there is one element that the coronavirus crisis will surely change, and I briefly mentioned it previously, is the importance of the S in ESG. Previously, we perfectly know that E and G were the main, not to say the almost only priorities. With the current crisis, definitely an health crisis, the S for social, but also for safety, security, sanitary, will improve and will come, I think, at the heart of all the investments and the ESG and the risk reward look. So this is the first element that will change and have an impact. And I think definitely the investors will look differently at their investments going further through this angle. And another element that the crisis will might change is that we know that countries, and specifically Europe, is planning big recovery plans, Marshall Plans type. All these plans will definitely be very sensitive to ESG criteria. So I guess that my thinking is that this crisis really could put an acceleration on the ESG transformation of the world. So meaning that this crisis will accelerate quite massively goals that already existed, but that would have taken probably much more time without that, with the crisis.
Thanks, Ines. Patrick, what are your thoughts?
Yes, I very much echo what has been said. I think the crisis will probably put more focus on ESG and clearly not only on the climate aspect, but the social issues will be absolutely in the focus and in the attention. And we have seen that actually with the issuance of social bonds year to date, which has increased massively with a lot of also COVID bond related issues. So in the long term, you said it at the beginning, ESG is here to stay. It is a mega trend, so it's not going to go away. As Mark Carney put it, we can't self-isolate from warming. So long term, ESG is there. There's no question. The crisis, I think, will help the trend to accelerate. In the short term, there is one question mark which can be raised, is that corporates and sovereigns are under pressure in terms of budget, and whether because of that it could slow down some of the investments. Personally, I think that on the contrary, for companies, there could be, it is not philanthropy, as Isabelle said earlier. So there could be also opportunities actually to reduce costs and to increase stakeholder engagement and employee engagement. So typically, things like less traveling, remote working, etc. All of these things are actually cost saving and not extra cost. And finally, from a government perspective, clearly to stimulate the economy and invest in infrastructure, all the green infrastructure side of things and what Europe is thinking about is clearly something on the table. So as a conclusion, I would say more focus on ESG, long-term trend that is here to stay, and the crisis will highlight more aspects of ESG and accelerate the trend.
Thanks, Patrick. That was sort of very insightful. I believe we have a number of questions that have come in from listeners. So the first one we have, I'll read it out, and obviously just let me know if you kind of want to answer it or take the lead. So the first question: as of today, standardization is still missing both on the rating side and on the fund selector side. Do you envisage that there will be some standardization? If so, how long will it take to come to an acceptable common understanding? The current situation leads to names being included in some funds and others not, hence leaving too much discretion. So who would like to take sort of to answer that question? I think Isabel, you would like to sort of make a comment?
Sure. I wanted to make a comment on what was said before on the COVID impact. But I'm happy to say a short word on that one as well. Yeah. Yes, there's a lack of standardization, as I said, will be very much dependent on the regulations on reporting from issuers. I would say there are already efforts that go in the right direction. The Global Reporting Initiative or SASB's reporting standards for financially material ESG reporting, or another one would be the task force for financial disclosures. So there are initiatives. I would say probably they will deliver more rapidly for companies in developed markets as opposed to markets because there is less maturity on ESG issues there. But as I said, regulation can do good or can be a hindrance in ESG, and I think for sure in fostering transparency from companies and transparency from agencies on the way they put together ESG ratings is for sure a field where regulation and regulators can help us. If I may also just very briefly come back to my previous point on COVID. Yes, I agree and said, social factors will be elevated by this crisis. I would say as well, it will foster a holistic approach of ESG. E, S, and G are not silos, and I would say just fostering green investments, and sometimes green finance is used to replace sustainable finance is I think not idle in the long run, and I'm hoping with elevated focus on the social aspects in particular, investors will demand that the solutions be holistic and tackle all E, S, and G aspects, which in fact are very much intertwined. So yeah, sorry for just adding this, but
no, it's fine, Isabel, no problem. Does anybody have anything else to add on that first standardization question?
Yeah, on the standardization question, I think that effectively regulators are doing quite a lot, and also in Europe we have this taxonomy going on to define what is sustainable investments and finance. I think there is a big fear on the ESG washing and to avoid any kind of low ESG approach. This being said, as I mentioned previously, I think that if we too much standardize, we might kill an important effort that is needed, which is the fact that investors need to find ways to improve the world going further in terms of ESG aspects. And there are so many of them that if we only put a few paths and not multiple paths, it can be more dangerous than efficient, I think. So for me, just to end, so for me, I think that indicators, having some standards in indicators and transparency is important, but it doesn't mean that everybody needs to standardize the way and their approach.
Excellent, Ines, sorry for interrupting. Our next question, how can we move the conversation beyond the E component, sort of green, climate, etc.? Can structured products be a catalyst to create and deliver new underlying strategies? Patrick, I believe you wanted to share your take on that one?
Yes. Thank you, Amélie. Yeah, effectively, it's a good question, and ESG is still very often assimilated to climate or to the E only. And as we touch base in this conversation, there is much more beyond. And even when you enter into each of the E, S, and G, there are a lot of subcomponents. So it is a role as manufacturers of products and index providers and the financial community to actually build more solutions which go beyond the E, and there are already a fair amount of them, but we need to do more. Education, very important as well, and then investors obviously need to embrace that. So I would say that there are two elements to this. So one is on the use of proceeds potentially. So you could be investing in some performance engine, but the use of proceeds go to the different part of the ESG, especially on the S side. There are many ways we can fund projects. And then in terms of strategies or performance engine, it's really about the thematics. And I think there are a few already out there, but clearly the market needs a bit more of those products to be available and to go beyond this perception of climate only. And again, as we said during this crisis, it highlighted other dimensions that are very important. And it might help also investors to realize that there are other aspects that could, bring very good risk-return profile that could also help to create alpha and diversification. So one example, governance in the EM space is the priority number one when it comes to ESG. When you speak to Chinese investors or to Asian investors, the governance part is very important. In Europe, environment has been always, and climate very key, but that's due to politics as well, to regulators and to the culture. And in the US, given the stance, of the central government with the Paris Agreement, social aspects are actually aspects that resonate quite well, and I mentioned a product that we did there. So there could be geographical differences in terms of adoption and priorities, but generally there is scope, and structured product could actually help to bring more light into the less known areas of ESG.
Does anybody else want to sort of add something before we move to the next question?
Sure. So maybe, Isabel, I can say a word about that. I agree that structured products could play a role, and I think they are very much here to complement what was here before. By no means should we try to, replace solutions, efficient solutions like, funds and actively managed funds, which were in fact pioneers of ESG. But with structured products, I think we can put ESG within reach of other categories of investors. Because again, those solutions can be customized to their bespoke financial needs, and And by doing that, we can spread the word on what ESG is. And in particular here, if we're discussing the social themes, I agree with what Patrick said. There are already a few indices available, and for sure it's an area which is gaining traction, and so there will be more coming to market. And as to the funding element or the use of proceeds element, to take a concrete illustration on the standards for positive impact finance, which I mentioned earlier, and how projects could deliver a holistic benefit on sustainable development. I'd like to illustrate with, for example, a project that is supported by our positive impact finance structured notes, which is the extension of a metro line in Milan. And so obviously, public transportation has environmental benefits, plus it also has social benefits because it creates affordable public transportation for people who live in the suburbs. So you see, it's green, but it's also social, hence the holistic benefits.
Thanks, Isabel. I believe we have time for one final question. So the final question is there a need to clarify or educate investors about what ESG actually is to avoid misleading them? I think Ines, you wanted to share your take on that one?
Yeah, I think that first of all we need to distinguish the retail investors from the institutional investors. I guess that the institutional investors are more educated and it is clearer. What is important in any case for both cases, and I will come back on the retail side, but what is important is that we know and we clearly see that there are different amount, I would say, or weight of ESG within investments. So there are the very heavily weighted in ESG type of investments, and there are some other kind of investments or portfolios that might be less weighted. And that's something the regulator is very sensitive to and is working quite a lot on that, is to be sure that at the end of the day, when we are saying that we are doing some ESG approach in investments, there is a clear understanding about the weight of the ESG within the portfolios. As far as the retail is concerned, I need to educate because I think that in any way, most of the retail have still a low level of finance understanding, and ESG is one new topic to deal with. So there is a need of education, but there is a positive element in the ESG for the retail is that it probably gives a clearer understanding and purpose of investments, where in the last 40 years there was probably a gap between what us as a financial industry and investment industry were trying to do to extract value from the assets, but with probably a loss in the clarity and understanding of the I would say the purpose of the investments. And for me, the naming of the illiquid assets named real assets is very meaningful for that, meaning that at one stage, I think everything that was not concrete investments mean little to the investors. And I think that the ESG is really putting back some sense and some meanings into the investments for retail. So there is a need for education, definitely, but I think it's also something that can bring more understanding in investment than in the past.
Thank you, Ines. That was a sort of a great sort of concluding remark to this webinar. Well, thank you so much to Patrick, Ronnie, Ines, and Isabel for sharing their expertise on this topic. Thank you very much to all our listeners for tuning in. We'll be making the recording of this webinar available in the next few days. And obviously, if you have any follow-up questions, let me know. So thanks to everyone and have a good afternoon. Thank you.